Hi, everybody. Welcome in. This is Michael with Viral Funding Solutions. I'm a business funding expert, and today we will be going into SSN free business loans and funding up to $50,000. In fact, no doc business loans, no PG, EIN only, and then up to $2 million plus in funding in this funding value ladder that perhaps it's going to just open up your world if you haven't seen this and really show you from the bottom up how to get prepared for funding, how to go into different types of funding solutions to maximize your funds up to $10 million and above. So in a second here, I will be shifting over to another tab to quickly go through this value ladder, showing you from the bottom of your business structure, having a business plan, a game plan, financial projections and assumptions, and then getting into startup funding and some of the things you are missing that other people are not showing you. But before I do any of this, and we won't go through this video for too long, I do want you to know why my business ceases to exist. Many of you out there are looking for the best solution for funding, whether that's a personal loan used for business, you are using revenue-based financing, your own bank statements, other financials, it's collateral-based. I always go through these 3 C's of capital with each and every one of you: cash flow, revenue-based or income-based, credit-based financing, and collateral-based. You either have one of these 3, 2 of these 3, or all 3. And I look at maximizing your potential around one of them and even multiple. And if none of them, and you are a startup or a non-startup, then we work on business trade credit, vendor credit, fleet credit, store credit. A lot of you are in a position right now where you're taking on jobs, you have contracts, or you're getting some kind of credit issued to you, but you don't exactly know how that works. That's a perception of, well, I think. It's more of I should know that I'm getting paid through vendor credit and I'm buying and purchasing supplies. There's probably a middleman that you're working with, that person is working through another company or an organization. And so you guys have to separate your personal from your business, and you guys will hear about this in a second. And I don't want you guys to go and feel overwhelmed. And that's why Viral Funding Solutions ceases to exist, because there's a lot of marketplaces out there, a lot of direct and indirect lenders. You're applying anywhere and everywhere, overpromise and underdeliver. And you're feeling over promised and you're just stressed out and feeling insecure and not sure about who, where, why, how to turn to things. I've been there, done that. I run multiple businesses myself in the digital marketing agency, lead generation, affiliate marketing in the health space. I did that one for a long time. I have a few other verticals in there, other ventures, and this is my primary focus as a business loan broker. You can call it business funding expert. I know how to evaluate documentation, analyze it, and connect you with the best lender and lenders, underwriter and underwriters that are out there. I have a very systematic process, very detailed, precise, punctual, and discipline oriented. So I'll be here along your side. I'm very loyal. And so you don't have to feel overwhelmed again of just trying to do it all on your own. People out there just trying to dig into you, bait and switch you. And I sit on top of loyalty, experience, reliability, flexibility, resilience, and there's more things to cover there. And I'll try to flip through this at the very end of this video. But the SSN free part, let's talk about that, and then we'll shift over to another tab. If you're trying to avoid all of these personal credit checks, I don't have good credit, or my credit is fraud, or I'm in the dark web, or you froze your accounts, or you don't have an SSN, and there's so many things you can bring up. I've literally heard it all. I'm very honest with you guys, of every single industry. We all have problems, pain points, questions, roadblocks, obstacles, and I'm there to help you understand how to diagnose, to how to get rid, how to fix those instead of just masking the symptoms. And this is going to be a very telling video when we get into the funding value ladder in just a second. But if you're avoiding trying to put your SSN, it's very difficult. It's hard to just get an EIN only business loan, a no doc loan up to $50,000, unless there are those credit unions. And there's some out there that may be able to, not always. It's not the right fit for you. But just think about it, $50,000. I like to take this back not even in business, but on a personal level, in terms of, okay, you already have rent, you have bills to pay, you have mortgages. Where is all this money going to? Think about it. $50,000 for starting a business or being in business is not a lot of money. Depending on how you use it is another thing. But if you're using that money and saying $50,000 is a lot, and I look at it and go, okay, you're already paying $3,000. So your annual debt service just for that category or that account or accounts, you're paying like 36,000. There's $36,000 going for 12 months consistently if you're having to amortize it over a year, and then it just reoccurs again. So $50,000, you already have $36,000 there. You have another $10,000 here towards expenses, or you just tucked away aside $5,000 for cash flow for the next 4 months. That's going to burn out in the next week. You don't have enough money for growth and expansion. So when somebody tells me 50,000, I can kind of go more or less 80 to 100,000 and above. It just depends on the situation. You have to really analyze that and go, how can I mitigate that risk? Well, you also want to work on your business credit. So no SSN is hard to achieve. You have to have a high cash flowing business. You have to be very proven time in business, revenue, deposits, money sitting in the accounts for months on end, even years on end, deposits. You have to have the credit. Everything needs to align. And even if you are a high cash flowing, high profitable business and all of this business structure is well put together, it still doesn't mean you'll get approved for those. The fact is we need to verify eligibility of the person, the credit worthiness, the financial track record, their personal credit. How can somebody lend you if they can't track this age of history back enough and say, hey, have you made any kind of payments? What have you paid off? What are you currently paying on? And so if they think you're going to be over leveraged, why will somebody just give you that? And even at that, a no doc loan. So no SSN, then you're thinking, okay, well, how about any kind of collateral? Yeah, you'll have to pledge collateral on your personal and on your business, likely all. And if not some of it, but a lot of it towards the business. And if you don't have enough there and you're just worried about all of these things, see, now we're getting into a situation that you shouldn't even be bringing up. And then 3, SSN is to verify, 1, like I said, and then 2, personal guarantees, rightfully so. You should be accountable and responsible for these things. And I don't mean this to say I'm aggressive or being negative. A lot of people may interpret it that way. I'm not that kind of person. I don't like having to tell you guys this, believe me or not, but somebody has to. So now let me flip screens over as you see this. Give me 1 second. But experience, like I said, versatility, and then integrity, and you have loyalty with me. And I've been there. I have multiple businesses. I struggled myself in the very beginning trying to figure all of this out, not having the necessary funds to work with. And like many of you are trying to find a solution. I went to school, I educated myself. I went to play Division I soccer. I went for sociology, transferred into chemical engineering eventually, saw the markets shifting, and I sought out wanting to start a business. So I got into business administration. I worked in construction, manufacturing. I did warehousing in my younger 20s, all this stuff in my younger 20s more so. Got into a financial logistics position. The company went down under. I was already preparing and starting a digital business, and I got into passive income, and I have multiple passive income streams. And from there on out, but even before that, the company went down under. I had to go back on unemployment benefits, food stamp cards, and I did not feel good. An introverted person. I don't speak as much. I take action more than I speak. Right here, you see me doing this. I want to convey the message to you, but it felt very embarrassing for me. That was in my younger 20s, and I didn't want to feel like I was letting my family down, even just for the little things, going out to have a family dinner. And I would think about not even being able to pay for those things. And that was, again, in my younger 20s. And we go through these things, even through somebody who's getting themselves educated. These things happen and they arise. But over it, things happen. And one of my last rules, I was not getting paid what I was worth. So things happen. You got to make a change. And so here, I'm not going to go detailing into this document too much, but I'll try to leave this down below in the description. I quickly want to have you glance through it, and then I may show you it at the end. We're going to go into the funding value ladder, but this is the document that you can see the different options. And I'll also leave a questionnaire down below in the description where you can learn more about filling out a questionnaire, and then I will be able to evaluate, analyze, and give you a proper response back via email on your best funding option and options. But everything here from revenue-based financing to credit-based to collateral-based to other options will all be there, and I'll break it down. There's an online bank term loan. So your perception of what you should get may not be what it is. And so down here, then I'll have like the conclusion on the questionnaire. You can go ahead and submit. If it's real estate related, you can see that as well. But I'll try to round back up to this at the end of the video. Now let me switch screens here and bring this on for the funding value ladder aspect of this. And again, the no SSN, the no EIN only business loans. If you're looking for EIN only loans, it's hard to get. EIN, you want to work on your business credit, trade credit, vendor credit, fleet credit. There's a step-by-step process that I've been able to use as well as with my clients, with my people, and then having you go through it in a very meticulous way where you know you are making the right purchases, the right payments, the right vendor accounts, the right reporting trade lines are showing up, and then you're getting an actual FICO SBSS score, because these are things that when you try to go get an SBA loan, you figure out that they didn't work. And you're like, why? Insufficient FICO SBSS score, business liquid credit score. You don't have the personal credit score. You don't have sufficient enough collateral coverage. There's so many of these components that those bank term loan lenders, that those SBA loan lenders are looking for, and the process takes longer. And so you have to evaluate your situation and where you are in the marketplace. And yeah, I'm not saying there are not none of those, no doc stated income. There might be, but at the end of it, sometimes they may ask for, hey, we still need bank statements, or they say we don't have to supply financials, but they want to verify something with personal statements or something like this. So things always end up happening, and be very cautious of that. You can also work on EIN only business credit cards. Sometimes you don't have to know PG them, depending on your situation and how much revenue your business is generating, and at a corporate level with EIN only in some of those, but we'll try to come back to that at the end. Here, it's the funding value ladder that I want to go through with you. And I want to move this over. This wasn't here before. There it is. So in this section, I'm going to spend time going over with you what the funding value ladder is. And this is just a way for you to recognize where you are in your journey to where you need to get to. So I'm going to start by reverse engineering this process from the top to the bottom, because that's just how my brain works. I love systems. I love math. I went to school. I love math. Those were my favorite classes. I love chemistry. Chemistry is actually my favorite of all. And then here, so at the top, we have what are called the SBA loans. To no surprise, SBA, will label it as an L for short. This is the cream of the top and what everybody wants to get to. And this is where everybody's like, well, I want the 7A 504. Can you show me how to qualify? I'm more than happy to. If you have to hear it a couple of times, okay. But if it's so redundant now and you're told that you won't qualify unless, and you are giving constructive feedback, at that point, that's your fault. And I'm not saying that to sound mean or aggressive, but a lot of you really don't open up your ears and listen carefully. And again, that's just the learning process. We get into business, we're so stressed out. Now we have a guy telling me I'm not learning. See how you're adding now more stress into that equation. If only you had that funding that you needed, imagine how you could use that. It's more than just the wealth that it'll occur in your business. It's the health and the relationships that will start to help and start to conform even better. But you don't need the wealth for those other two to happen. You can work on them right away with your character and with your reputation. So down here, up here we have the SBA loans. You can say the 7A loans, 7A. You have the 504 loans, the 8A mentoring program, not a loan. You have the micro loan. You have the community advantage program, and there are more in between those and some that may come up in time. But these take the 3 C's of capital. And so keep in mind, again, we're going to go over the 3 C's of capital, C for short. And again, this is, you have the credit, you have the collateral, and you have the cash flow. That's what the SBA is looking for. Now, there are some, and there's one most recently where you can get up to $150,000 without collateral, without profitability. You can report a loss, a gain, no proper cash flow, no down payment, unlike the other ones that require that. But this is up to $150,000 and does have more tight credit requirements. Up to $150,000 in annual gross revenue is what they're looking for. They're basing it off that more than anything, than the actual EBITDA, than the actual cash flow, the net operating income, and they're looking at those numbers. They're looking at higher credit, 700 and above. They're looking at 175 FICO SBSS coverage. Yeah, but I don't have that. What can we do to work to have that? See, you got to ask yourself, how can I learn the material properly to learn those skills, or to learn and to apply, keyword apply, myself to getting my credit in position, getting my revenue, getting my collateral in position too. So we have to start in the right place. Now, what I want to do, and I thought I'd do this in the very beginning, we start at the top, we move our way down, but I will actually, okay, yeah, let me do it end to end. I would usually do it backwards, but down here, we have the, let's put down here in this line, we have the business structure. We'll label that as BS there. So business structure of your business. This meaning everything, meaning how you associate a team in operations and financial control, in the product development, product marketing and advertising. There's so much that differentiates you from other competitors. You're putting a business plan together for a specific lender, a grant opportunity for an SBA startup solution, projections and assumptions. And I've helped out people with this, and I've seen a lot of business plans coming through. And so here we're having the incorporation, we're having the LLC, or if it's a sole proprietorship, it's an S Corp, C Corp, H Corp. Be very careful about those too. And those are a lot of the time set up for business credit already, and to get more of it. And sometimes it can be difficult to get certain types of loans for them. But here, we look at everything. We look at the business name. We look at the phone number. And I'm not going to get into some of these here, but you have a lot of options, and I can share that with you in time. I have my free business credit building video series. I'll leave you down below in the description, but there are so many of them, and what I've vetted through, I've tried just about all of them, and I know how they work, how they don't work best, and how they give you a right back office to do things, and how to better manage things, having a CRM system in place if you needed one, having your website together. All of this stuff is very detail oriented, and you have to make sure you have a presence for it, especially if you're applying for business credit, personal credits. And so down here, we have the whole startup phase. So the whole startup phase in this section, you're just getting your business started and rolling, and you want to make sure you have the appropriate funds for your business, but you're neglecting the foundational elements because you maybe don't know, nobody's showing you. And again, I'm not getting into each and every one of these on the business phone number, Ring Central, open phone, or having call 1-800-188 number. I can get into all of that at another time. A Regis account, making sure you have a physical location versus just a virtual location, or a physical office, a virtual office, and the differences between these. We can work with these in time. Those are very important. And that way you can show up. If you have a traditional brick and mortar physical location business too, you can show up in the Google search engines and Google Maps, Google listings. And that's for another time. But startup here, here's what I want to say is the intermediary step. Like right here, you guys very much need to pay close attention to, and this is probably the most important part of this video. Let's put a big arrow right here and say PC and BC. I'm sure some of you may know what that already abbreviates for, but this is for personal credit and business credit. What do I mean? So let's put a slash right there. Let's separate the two, but more importantly, let's put some parentheses around them like we're multiplying them. Order of operations, a multiplication equation, however you best want to interpret that. But you're multiplying your PC times your BC, and that's giving you the maximum, max to the second power. Let's put max to the second power up there. I ran out of room a little. I can scroll this up, but what that means is a lot of you need to start working on your personal credits and actually starting from repairing it, fixing it. And I've had a lot of situations with business owners where they began at even lower than a 500 credit score, and they took the time to come with me and show them and look through their reports. At that point, I really don't have to look through reports as much. And a lot of this, I don't always have to ask for a personal credit report in the beginning. I, at times will ask for it depending on the situation. And other times we just ask for it on the back end when we're going through an application process. We can look at it then. But I've had a lot of people who come to me who have charge-offs, chargebacks, or they have foreclosures, bankruptcies, undisclosed UCC liens, tax liens. There's late payments, derogatories, frozen account. There's you can go. I can go on and on about this, and this would take another hour's worth on credit on each and every one of these. You guys, on each and every one of these, I'm going through. I can literally spend hours upon hours on, but I'm gonna get through them as quick as we can. We are 20 minutes in, underneath 40 minutes. Please give me that time so we can finish up here. And so I apologize too if it's a little dark. Let me do this for you guys. I have the HP lighting on. It makes a slight difference. I know it was a little bit darker because of the weather and the cloudy forecast here in Washington, but I don't think that was a bad thing. It was still light enough. And so, with that said, the personal credit, we could bring people up depending on where you are right now and where we have to meet you, what problems, what pain points, what questions, what obstacles, what roadblocks, what are your actual results. And so when I see all of this, I can have a better answer and say, well, we got to work on this first. And you have a charge off. You can't have that in the past year or two, specifically for business credit. Personal credit stuff for personal loan stuff like that, perhaps a year, sometimes even 2 years. And if it's just two most recent, just above 2 years, but it hasn't been removed or hasn't been shown as you've been able to clear this up and work on this. And even after that's happened, after that period, what other payments, what other things have you been approved for? If you've been disapproved for things, there's a reason why this keeps happening. And just because you don't know exactly, and I'll help you, I'll show you guys this stuff, especially in the questionnaire that I'm going to link you guys to down below in the description. Fill out that questionnaire. I'll then be able to give you a highly personalized and customized email response on your best funding option and options. You'll be blown away. It'll probably feel overwhelming at first at how long it is, but I'm going to navigate you in that email. I'm a professional at what I do, and this is me using my skill sets in that form as an introvert, showing you very detail per detail, even numbers and stuff like that are ballpark. So check that out. So making sure you separate your personal and credit. I won't get into personal credit and business credit. I won't get too much into all that. I'll leave a free business credit building video series down below. But it makes a significant difference. You have bad credit trying to get approved for a high amount, but you don't get enough. Business credit is going to take you to the next level. Getting approved for 0% interest business credit cards, we can also do that for 6 to 18 months. And I'll leave more material for that, down below in the description. But huge emphasis of power here on the personal credit and then business credit. These should be multipliers. And at a point, you should be getting so far into your business that you don't have to rely on your personal credit and you're not having to secure everything with your PGs. And sometimes there will be a social security number asked for to get those business credit cards for a lot of them. And so at a point, you're separating yourself from just using a SSN, and you have so much business credit built and the certain credit cards you have, all you have to do is increase those limits, ask for other cards, or we get on top of that a loan, a fast amount of a payday loan or a quick injection of a short-term financing, or if it's longer-term financing, then we look at that. So there are many ways I can spill this up and go through all the qualifications in this, but I won't get into. But you should know that a lot of the times these lenders are looking for good credit scores. They're looking for somewhere around a 680 Experian, if not 700 plus on all three consumer credit bureaus to do 0% interest business credit cards. We can stack on top of one another, and 700 on at least two consumer credit bureaus for whatever bank, or if it's not a banking solution, when we're looking with the max funding with the private lender. That's why I always recommend them, because there's maximum approvals. You can walk into a bank, they probably get you a little bit 10,000, but you walk into an expert that I'm associated with and you get 50 to 100,000 in approvals perhaps. So that's what I see a lot of the times. And just understand what opportunity cost you're foregoing with a lot of this. 670 scores you will see as well with these on all three consumer credit bureaus. Just it depends on the level of the lender and what we can do per that client. And I'll show you these solutions so you don't have to feel worried about it. There's down here, I didn't say too much of this, but you have the 401k IRA financing. You have the rollover account with the IRA. Well, we can work on a few other solutions on that matter. I won't get too deep into a lot of that stuff. I'll share with you in time, but just know that 401k IRA rollover and stuff like that, 401k rollover, I should say, account is available. And there's also equity crowdfunding. There's normal crowdfunding. There are venture capitalists, angel investors. There are many other ways to look at this situation, but at the core of it all, no matter what the startup solution, even if it's not a startup solution, even if you're up here getting these SBA loans, you got to work on your personal credit and business credit, because I've seen it time and time again be the difference with somebody purchasing supplies, like a plumber who gets the better equipment versus another competitor who has the right material to do the job, and the other person loses out on that client and even future clientele that one person could have referred them to. Or there are other ways of marketing yourself. Now you're doing extra work. You don't know the lifetime value of a customer. Your business math doesn't add up. A lot of you don't even know your numbers correctly, but you're looking for funding. So you just have to sit down and have the right business plan and understand those numbers, that return on investment, that financial and activity ROI, and there's a lot of things. So let's go away from this part and let's get into this section. I was going to work backwards, but now let's go up here. And in this aspect, we kind of already covered this, but it bleeds into it. Personal loans, personal lines of credit, doing creative credit-based financing. We'll just put creative C for creative credit-based financing. We more or less spoke about it, but just below this, again, you have the business structure, the startup. Right here, they're looking for funding, the plan, everything put together. Oh, but then there's an intermediary, and we could have put this here. Personal credit and business credit. Everybody seems to jump over this. Oh, well, I got to go over here, or I got to go all the way up here. If you don't have a credit partner, and I'll get into this in a second, then you get somebody who can allow, you could have a business partner. It could be a family member, a friend, somebody who is willing to apply with their own individual credit, co-sign, guarantee it. Somebody who's willing to apply and say, hey, I'm willing to take on that debt, co-sign if we're allowing that. Not always is it allowed, but they can take on the debt fully. Or you say, I got my credit up, we're going to split it half and half, or I'll take 80% of it. Can you take 20% of the ones that I can get approved for? Boom, help me out. You repay them out. Maybe you have a contract with them set in place, or a specific way to pay them back even faster. With the revenue that you're generating in your business to put it back into your business, you take some of that out, personal funding or personal for yourself, and you take that and you pay back the person, or in other ways, however you best see fit. But this is creative credit-based financing. This is when we now get into the whole personal loans for business. They're also called installment/term loans you can use for business. I normally see 7 to 15% interest amortized over 1 to 5 years. I've seen 3, 5, 7 year approvals for that. But just imagine a personal loan with good credit. FICO Experian is a lot of the time we look at 680, but best to have 700. Strong credit history really does help, and that's what we're more or less looking for. And we're looking for those aged accounts. We're looking to make sure there's nothing that's recent in late payments. How long ago were those late payments? Derogatory, any charge-offs, anything like criminal backgrounds. We're looking at some of this stuff and making sure that we fully have gone through and vetted the utilization on all revolving accounts or Experian accounts. We got to drop that down. We got to focus on the oldest usage card or the highest usage, or the one that's been in your account the longest. If that's the one that has the highest limits, that's likely the one that you're using most than the ones that are the lowest for a lot of businesses. Those really don't even get used as much once you start building up more business credit and business credit cards. That's just a fact. And the thing is, we got to look at lowering the debt ceiling. We got to look at lowering the utilization and paying those first, and making sure that those reflect. So then when we pull our credit again, we look at it and go, okay, this is low utilization. Even if it's a little higher than 35, 40%, we can still consider it. You have payment history. You've been showing that you've been paying things on time, even early. Okay. You have nothing else that's late, no foreclosures, none of this. Okay. Nothing derogatory that we should be worried about. All right, that's just a matter of bringing that down, paying down that balance. All right, we can work with that. But there are a lot of applicants who I bring through, and I see it all, guys. I look through these credit reports. I look through bank statements. I actually do the hands-on work. So be very cautious again. who you turn to for information in this field, because a lot of people are just glorified referral partners. I spoke to somebody yesterday they were like, well, you're sending me to this thing, it's not a direct lender. And I go, yeah, I have those direct lenders and indirect lenders, but we have those partnerships here. I can go and pull from one or two of those lenders that are specifically in your field with my team, but it's best to do it this way because of the market, the economy, the downturns, the upturns, the recession. There's a lot of reasons. And you won't get max approvals if I took you to a direct lender in this market a lot of the times, even with that personal and business relationship with them. Believe me, I've seen it time and time again where you go over here or it's another place and there's like 50,000 in approval. Over here, it's 90,000. I once helped somebody 15,000. They got 90,000 with us. They took the wrong amount and somebody else took a wrong offer. So it's just a matter of a split second. You can lose out on something. People taking out money every 30 to 45 days. I have somebody in my email and a lot of people in my email inbox a lot right now. Hey, I got into trouble with those cash advances. Well, yeah, you did. Somebody else probably didn't because they knew how to use that money, how to turn that money in double and triple, quadruple with medium to higher rates. So you have to understand with bad credit or good credit, how are you using that money? Okay, you have I got a contract. I got to put inventory. I got to send money here. I got equipment I'm going to be purchasing with this money, Michael. Even if I just got 80,000, I want 150 or 200,000. Even if I just got approved for 60 to 80,000, I can make do with that money now, come back and get more, right? Yes, you can. Underneath the right lender, underneath the same lender, add-on funds. We get a new lender. At that point, you're moving up levels, but I can help you with a variety of them. And I have those direct lenders. I have those indirect lenders as well in that brokerage setup where we can look at those direct lenders that I already have those partnerships with. So again, just time and time again proves to me that a lot of people just let their own ego, let their own hard-headedness, let their own cockiness, stubbornness get in the way. And if you don't have any of that, great, maybe one of them, but we leave that out the door. And we're going to do this as energy and time efficient. And so personal loans, personal lines of credit, and those are a little bit harder to get with credit scores and more. Then we're looking at trying to combine personal and business credit cards. We can try to do the 0% interest if it isn't 0% interest. And then we try to do a few other ones. If not those, then we look at credit unions kind of as a last resort. But creative credit-based financing, you can apply this here for anything. You can apply it for purchasing a business. You're purchasing real estate. And I don't want to get too specific on cards and all that in real estate right now, or for what type of real estate. I'll let you spur that up to your imagination, and I can go into in each and every single type of real estate specific situation on fix and flips, distressed properties, fixed to rent, or you're fixing it and then holding it, fixing and selling it right away, however you see it, and what you're doing, construction, ground up construction projects. There's so many scenarios I can draw up on where I've seen and I've helped out people actually get through the funding, share with them the application. This is how you do it, and and all this. And you can use it for those properties. You can use it for what you need to. And in combination with those 0% interest business credit cards as well, we can try to use personal funding. So unsecured, non-collateralized personal funding. There's sometimes collateralized personal funding, but that's a whole different program of its own. A lot of the times they're going to want high commercial real estate property or other residential property in some cases. Not always on that, but it's going to be a higher virtue. And at those too, there's also cash out refinances. In case you were wondering, you can do a cash out refinancing and pull equity from real estate, from property that you have. And so that's a big bonus for a lot of you who have that and say, hey, well, if I can avoid those medium to high rates and I can get approved for more with that equity. And a lot of the times these lenders want to look at a minimum of 250,000 to work with, sometimes 200,000, 250,000. A lot of the times they're working with bigger numbers. So for a lot of you who are like, I just want to get 25, 35,000 out of this, that's not going to be enough of a return on investment for that lender and for everything they need to appraise for. And there's so much more on their side that you guys have to understand. Once you understand how the lenders think about each and every file, you'll be in better position. And I'll try to go back to the cash out refi later on and some of the other options. But creative credit-based financing, whatever you are doing in your business, it's more flexible. You couldn't do traditional real estate financing, a ground-up construction lender. And I work with the best, again, in the real estate space as well as in the business space. I'm very loyal, very transparent with you guys. I'm a listener more than a speaker. People hear me pause a lot and they think that I'm no longer there. Well, that's because I'm a listener. I'm absorbing everything. That's who I am. And I am really paying close attention. I remember people. because of stories, because of their stories, not always on a business level, but themselves on a personal level. And you don't have to open up much. I'm an introvert too. I don't trust people easily. But if we can find some common ground, you'll learn to appreciate what I'm helping you with and how much time I take on a lot of these files. So please be mindful of a lot of that. And so here, creative credit-based financing is a great solution to go into. I'm doing a lot, and I mean a lot, for startups, non-startups. This works for. There's true no doc, 0%, personal loans, personal tax returns we'd have to supply, pay stubs, W-2. A lot of the times we like to verify by personal tax returns and a few other things. A lot of the time just personal tax returns, but depending as well as on the lender, but that's how we like to look at it. Now up here, now we're getting into a different part. This is the revenue base. I know, guys, sorry about my, I don't want to call it necessarily a mess, but I'm putting things here together for you so you guys can understand. So revenue based, you can also call it cash flow based. You can also call it income based, IB. And again, this comes back to our next part. We're working away from credit. Now we're on revenue based, cash flow, income based. Cash flow can be misinterpreted depending on the service, because like an SBA and a bank term loan, which we're going to get into, they rely heavier on cash flow analysis. And I do this myself with my team. So I'll look at everything. I'll look at profit and loss interims. I'll look at balance sheets, debt schedules, personal and business tax returns. And I do know how to do this stuff very, very well. Like when you guys don't see me here, I'm quiet as ever, and I'm working these files. And so take it from somebody who, as an entrepreneur, business owner, when I try to help people out, it's more than funding to me. It's more, how can you see the market better? Maybe how can you market yourself better, advertise yourself better in your business and your business, yourself and business? How could you have a better brand, business and personal? But more than any of that, how do you build better character? See, none of this will matter to you until that character piece, evolves. It changes first and then it evolves. And what I mean by that is the foundations of how you think. How do you compartmentalize? What goes on in your mind throughout the day? Do you question the right things? Do you speak when needed to, or do you interrupt people? What are your values? What are your beliefs? What are your aspirations? How's your attitude and your effort? How are the things you can control? And you focused on all the external things you can't? Everything should be focused on from the internal out, but we focus on external in. We take everything we're hearing, social norms, because somebody did this, they did that. Oh, that cash advance didn't work. See what everybody else is saying. You're blind to it. I'm not blind to it. I have compassion for people like that when they talk like that. And I did not do anything wrong. But because finances and business are a touchy subject, you tend to act and outlash that kind of way. And so for me, somebody who knows their stuff and is very compassionate and loyal to people, very nice, I give people the benefit of the doubt. You met me in person. I'm a very considerate, nice person. You probably won't hear me speak a lot, but we're going to build a very intimate relationship on a personal and business level in terms of getting to know one another and saying, hey, okay, this guy is the truth. He really does know what he's doing. I didn't say he doesn't know what he's talking about. I said he really does know what he's doing. See, I'm putting it into action. I'm speaking it into action. I'm not saying that I don't know what I'm doing in terms of my knowledge, because I know a lot of that and I have that already, but what he's doing is an action. So I am more nonverbal. I have more gestures and I take action. That's just what Libras do, how we show our interaction, how we also show our romance at times with our body language, with our expressions. That's just how we are. And so back to this, I know we went off on a tangent, guys, but revenue-based. You have a lot of solutions. You have no collateral, of course. That's what we're focused on. This is low documentation. This could be included with bad credit. You can have good credit. This can involve no hard credit checks the majority of the time. Sometimes if there's something we have to look at, yes. especially if it's lower credit. But for the majority of it is soft pulls. That's it. Over here, soft pulls with personal loans with pre-approvals until we get a hard offer. Then we can do a hard pull at that point. That's fine. SBA loans, hard pulls. Bank term loans, yeah, a lot of the times hard pulls. Revenue based, a lot of the time soft pulls. You're in and out within 1 to 2 days, if not max plus 3 days, which if you guys do the math, well, I'm just adding the 2 to the 3 there. And then that's equal to 5. I'm not subtracting 1 minus 2. But if you do an order of operations, I guess. But here, 2 plus the 3 as most as 5 days. And it can evolve into about 5 to 7 or so days as well, just depending on the file and what we need to look at. How fast did you submit documentation? I have people who go, well, I submitted this. And no, you're missing 1 month or 2 months of bank statements. And now it's been 3 days. And you expected an answer before when? Yeah, that could have been done, but you didn't have that. Or some of you right now who are waiting for your April month's bank statements to hit if they haven't already and waiting for them to supply those, I can understand. But a lot of you will have those and can't supply them. But a lot of you just hold up. And what you're really holding up on isn't me. It isn't the process. You're holding up on yourself. That's what it is. You're holding up on your accountability and responsibility. But even more than that, you're holding up on your personal liability and your assets. You're either an asset you're adding to, or you're a liability. You're either accountable or you're unaccountable. You're either responsible or you're irresponsible. You can add the two, but make sure that you guys set that expectation for yourself and those standards. And that'll really go a long ways. But revenue based, we could look at cash flow. And we're looking at month-to-month bank statements. And we're saying in the last 90 days, we're looking at, let's say, April now. We're looking at March and then February. And we're saying, okay, what was your lowest month? How much money is going in versus what's going out? Too much is going out versus what comes in. You're a high risk. You already have a low average daily bank balance you keep into the account. And that's another red flag. I see a lot of business owners, one that I did recently where they were underneath 1,000, yet they're generating 20 to 25,000. Currently, they're doing that, or last month. And then I go, their lowest month was around 20,000 and they're averaging around 30 to 40,000 more or less. And I go, well, you have a low, less than like $500, less than $300 average daily bank balance. Think about the math of that. So if you're on average, you keep only $250, or let's just round up to $300, $500, let's keep it at even to make it easier for you and us. So $500 per day by 5 days, but we calculate it over 7 days, even though we're pulling from Monday to Fridays a lot. So think about the numbers, and I won't get into all the final numbers here, but you multiply that, and then you take that number, and then you multiply that by another 4 weeks. What does that do? How much money is that? Well, how much money are you already allocating into other obligations, other debt obligations? So did you think for a second, Mr. and Mrs. Business Owner, that somebody's going to lend you $500,000 just because you're doing $300,000 and above? Yeah, the chances of that, and you having an average daily bank balance that are higher than underneath $1,000, of course, that's a different situation for a different matter and a different time. But for a lot of you, it's just this whole game of, well, I have a lot of, like, I had to decline somebody the other day. I was literally going out to go get a haircut, and I had somebody texting me over and over. I couldn't get to them. And I'm not going to take my personal time to just start messaging people and all that. Times I do, but having a lot of late payments, having a lot of overdraws, having insufficient funds, you're already negative into the account that the current month we're trying to get you funding in, and you're just trying to plead a case. Sometimes it works, sometimes it doesn't if you think this is going to reflect, but you have too many non-sufficient funds, negative days, and you can tell me you have the best business plan, and we could have gone over that before or after, even more so before. It makes sense, but now it's a whole different level when I start asking you about the numbers of the business. If I were to ask you, like, if you were to put $1 in here, do you know how much you would get out? Is there any kind of pattern recognition? Do you even know the market? And if you were to go run ads or do it this specific way to purchase this kind of inventory and product, how fast would you get it off the shelves in the next 2 to 3 months? And then you're going to move in newer inventory because of the market, a new iteration of that product that's selling for X amount. So now you have X amount of units, and for X amount of units, Y amount is being sold for per client. And for my existing, like, there's so many things you guys have to understand. And this is why a lot of you find yourself into situations that go, oh, but I started a business. I just didn't know how to, like, I went out there and finally got clients. Or I was like, okay, well, you didn't understand the math part of this equation. And that's what you're in business for. You're a business owner. You guys should know that. So back into this, I know we're 44 minutes in. I was going to say we're going to close up earlier. We're going to try to keep it underneath an hour. We're going to run through this. So revenue-based financing, month-to-month bank statements, the cash flow going in versus going out, at what periods. It's like interim financials, but it's a lot of the times month-to-month bank statements, at least 3 months, 4 months in certain states. We have a copy of your driver's license and a voided check, get you in and out. But if you're causing problems going through this stuff and I got to go in and ask you questions, why do you even submit my questionnaire to begin with? I could tell a lot of people are very energy and time efficient people, very irresponsible and unaccountable just by those measures. And it does tell me a lot. Like, you guys see your employees and the employees see you in a maybe different light, but I'm able to see how a lot of you actually have like habits and routines. And I'm not judging anybody, but I'm just saying, hey, these are the things we need to address. We haven't even addressed the biggest problem. It's not wealth, it's health, it's relationships that then transfer into wealth, not in the beginning. So revenue-based, we're looking at month-to-month bank statements, getting you approvals. We can go in with bad credit, 450 and above, 500 and above, 500, 550. Depends on the revenue category, depending on the A tier, B tier, C tier, D tier, et cetera, type of lending client you are and lender that we're going to associate you with, that I will find the best lender for you for that, myself and my team included, and get you maximum approvals for that with a disclaimer there of what you can get. And so revenue-based, we're looking at that. I can go on and on about this. I'll try to conclude this video with that document we went through earlier. But non-collateralized funding, medium to higher rates, of course, with this. So we'll just put medium to high MTH and 1.19 to 1.55, if not 1.19 to 1.69 factor rates. They're not amortized as traditional business loans on a remittance. So you can't say that there are actual interest rates or total paybacks. And they're based on a future percentage of your business's receivables / sales that you're giving back to the provider. It can be a fixed amount daily or weekly. Yes, I said daily or weekly. And there are monthly options. I'm going to get into some of that. The personal loans, credit-based, you can get monthly options there. And so you have to kind of outweigh and look at and say, what can you qualify? What can't you qualify for? Does this one make more sense if this is going to be reflecting my personal unsecured business financing? If it doesn't report to some personal credit bureaus timely payments, which a lot of these they may not. Sometimes they do, but normally they won't in many cases. And you go, okay, only when I were to default or something bad were to happen, then those would show up in my personal credit. Okay, that's the liability in there. Now that's a problem, etc. But that's how we mitigate risk, by giving you daily or weekly micro payments. We are able to, and more importantly, you are able to track and say, well, if I have this average daily bank balance, sometimes it may fluctuate, but you go, well, I know my consistent revenue per day, per week, per month, bi-weekly. Like, for you, this should be a no-brainer, but a lot of you are very sensitive to that because of financials. You don't really understand the numbers of your business. How do you really, it's hard to say this, but it's just the numbers of your business. If you actually sat down with an accountant, but not just an accountant or somebody who handles the finances, if it's you, okay, but do you really understand the numbers? You understand that it's not just about increasing the clients. It's not about increasing product, but it's about decreasing churn rate. It's about increasing your hypothetical max of assumptions and projections just by decreasing people who are, if you're offering a service, if there is no churn, that's a different part. But how do you mitigate? How do you retain for the lifetime value, the long-term value of a client in your business? What numbers do you address to those people? If you're churning one thing or another, you don't know if you're going to have a contract next week, the next week after that, you don't know if you're going to have this person paying you. Of course, it can be a hindrance. A lot of you guys are surviving day to day, and that's not a business. That's just survival of the fittest at that point. And so, yes, medium to high rates, but the benefit of needs to exceed the repayment. That's how you need to look at it. Are you doubling? Are you taking 20,000, paying back 27,000? If it's just 6 to 8 months, if it's 12 months or whatever, 4 to 24 months, 3 to 24 months usually is what you see here. Over here in the personal side, 1 to 5 years a lot of the time. But if you just were given 8 months, you're like, well, I got 12 months, but I just only needed 6 months. Cool, paid it back, done. Michael, I need more funding. Great, let's do it underneath the same lender. This time they're going to probably double, triple. Better terms, better rates. Okay, now we got another lender. Actually, let's move up another lender. Oh, second position, third position. Okay, now another lender. if you needed to do that, but don't over leverage yourself. The benefit has to exceed the repayment. Taking 20,000, paying back 27,000. Well, am I making 30 to 40, 30 to 50,000 in the next coming months, in the next week, in the next 2 weeks? How does that number look like? If it's just going to go all towards expenses, can I take a hit of $10,000 that I'm not going to have next month? Not going to have that 5 to 10,000 extra in cash flow to recirculate in my business. Is it a high enough cash flowing business? How do you take a low cash flowing business and turning it into a medium and turning it into a high cash flow based business and a profitable one at that? So you got to look at that. When you're a higher cash flowing business, your products just stand for themselves, and those aren't the normal issue. Your products and services are not. Your clientele is not. And there's a lot more to that. I'm not going to get into all that right now. But here you could see that. I don't want to get too deep into the revenue based. Now over here, you have actually, let me do this. Yeah, right here, you have the collateral based. Great. So credit, cash flow, collateral. And I can kind of change this one here that we're going to learn about in a second. Credit, cash flow, collateral. Let me say that again. Credit, cash flow, collateral. None of this, then what do? We work on your business credit. And in tandem, if we needed to, your personal credit. And you're going to realize that soon enough that, oh man, I just separated my business. And then what you did is now you can add that here on top of here. You can add this on top of here. You can add this on top of this, on top of that. Boom, firing away. You're going to see these right now. But look, here and then here. And I know it sounds more simpler said than done, but it really is. And a lot of you are just trying to seek the least path of resistance. And if you were just to work on this, I have people who come to me and go, I fixed this issue. Okay, great. Let's start it. Boom. They get their funding. Others will go, oh, Michael, there has to be there. Can you help me with this? We've gone through this like multiple times on multiple accounts. There's nothing immediate you can do. Maybe you get a credit partner, 401k. You look at getting a debt restructuring or a specific situation like that. But here, collateral. So the collateral part of this, let me move screens over. We're going to try to close this up here. We're getting into an hour mark. Collateral-based, unpaid invoices, account receivables, heavy machinery, even it could be like trucks, just depending on the amount we're seeking. And there's a lot. I'm not going to get into that part. We can discuss that in time. I've done a lot of these. And certain lenders will not take certain trucks and equipment, just depending on the situation. So account receivables, there's a lot of details to each and every one of these. I can show you guys in the questionnaire as well as more. You also have the real estate side of this. Pretty cool stuff we can do with that. Seen a lot of it, done a lot of it. Pretty cool. There's plenty more. Those are just some of the many that I've listed. Inventory is another one. Inventory, financing, AR, inventory line of credit, AR line of credit. There are those solutions available, and you can get longer terms, even past 2 years. You don't have to always worry about 4 to 24 months. It could be past 2 years, 3 years, past 2 years. In those cases, 5 years in some of those cases. And so it just depends on the situation you are getting involved with. And does the term really determine what you will take or not? In some cases it does, but you have to look at seeking a longer term and a shorter, shorter, I mean as a smaller repayment, not an actual shorter term. But if you can try to get a longer term and a smaller repayment to begin with, that's what you should do. And if you can't, then you got to begin somewhere. Well, if it's the repayment that's low, but it's the term, well, okay, it's the term that's short, the repayment's still a little bit long and bigger, but I got to begin somewhere. Can I try to take less, lower that repayment by an extra 1,000 to 2,000 or however much? If you have that negotiation power, okay, I can work with 10,000 instead of 20,000 because I'm going to be paying back just 2,500 to 3,000 at the end of the month, paying back this month daily or weekly, subtracted $500 from that. I feel comfortable doing that. Have an extra $500 to work with, or if I wouldn't have had that. See, this is how I think. This is how you're going to learn to think about these things, through experience and having the right game plan for what you do. But collateral based, we can work with those. We can even work in tandem with collateral with some of the others. We have commercial real estate, I didn't say, and or developable land. I'm doing those as well. But plenty of them. I can go on and on. You can even say a cash out refinance for a sale leaseback for the lender to hold on to the title until you make the full amount of payments. Then they can give you back that title, or other situations. I'll try to get into this a little bit later, but that solution is there if you have the collateral to stretch out your terms, lower your repayment, get those monthly payments under board. You don't have the credit profile for it. There's certain annual revenue requirements that they do want you to meet to, like $1 million in annual sales in some cases, or close enough to that. You also have the account receivables over 90 days. They want to see at least 500,000 in account receivables, a total of 500,000, I should say, over those last 3 or so months. But collateral base is right there. Now here we get into the FDIC banks. And over here, we can work on a TL, which is a term loan. And over here, we have a LOC, short for business line of credit. And this is what everybody is accustomed to. There are online term loan lenders that are from the bank. There are online with lines of credit for the banks. There are also different fintech companies for lines of credit and other term loans. But those other term loans are more associated with the hybrid advance / term loan. It really is more of a cash advance. It might not be a traditional merchant cash advance. There are traditional MCAs. There are untraditional MCAs. I've had clients that come to me and go, well, I'm depositing this way and that way. Well, they're going to look at it only from this point. Over here, we're going to look at all revenue. So it's going to factor in even better. It's going to help you. And so bank term loans, you have lines of credit. Those can be stretched out over 3, 5, 7 years, 2, 3, 5, sometimes 7 years. This is based more on your cash flow than just your annual gross revenue. We're maybe not entirely looking at profitability like an SBA loan over a certain amount of time, but we want to make sure you have enough that you can service your current annual debt payments, if anything, and the new debt that we will be giving you. We can refinance underneath that. One below that on revenue based with those more fast advances. Yeah, you can still try to refinance and consolidate, but it just depends on how much you get and then the rates. You got to look at that and say, well, if I can refinance, consolidate here, you can consolidate those advances underneath a term loan, underneath an SBA loan. But if you're already over leveraged and you have too high interest here, your EBITDA, your cash flow reports negative, and like your annual debt on top of more debt we're getting you, it's just going to be hard to approve you for it. We will try to get into a Q&A, Dr. Glock here. We are getting into 58 minutes. I'm going to try to close up underneath an hour and 5 minutes. Please give me guys that time, and then I will get back to you. But with all of that said and done, you just have to know that it's going to be a cash flow analysis. FICO SPSS scores 155 a lot of the times you see and above. They don't ask for collateral supposedly. Could sometimes, but normally it isn't with these online term loans. And you see that they could put a business lien on those assets to make sure that the deal goes through. A UCC lien you'll see filed with these. So just keep that in mind. At what part does it make sense? Credit scores, normally 660 and above, 675 in some cases. They're going to be looking at. There's all of these assessments, maybe things that don't show up on your credit, but show up on our side is what we're looking for when we're doing underwriting. And so you have to see, and it's a finicky subject sometimes with credit because some things change, and so some things don't report as fast. TransUnion is the one that can take the longest to report scores and accurately in some cases, not always. But just understanding your own reports and pulling your credit and monitoring your personal and business credit, it really will go a long ways. I ask people to this day, I tell people, go look at your business credit. And when they come back to me, they go, do you have the application for me? And then I have to ask, or I don't want to be that person to ask, okay, let's just move on with it. But I'll ask at times, did you look at your business credit like I recommended you to do? No, I did not look at it. Well, why didn't you? That tells me a lot. Why didn't you? Well, I don't have time and I don't. Okay, so what you're telling me is not that you don't have the energy and time. It's telling me is you are unresponsible. You are unaccountable. And I won't say that, but read between the lines. Hear what is not being said. That's who I am. I hear what is not being said. So bank term loans, they do have higher requirements, 250,000 in annual gross revenue. FICO SPSS scores, business liquid credit, personal credit, 2 years time in business, and there are a few more things. But let's go back into this and we're going to close up here. Now up here, now we're at the SBA loans. And these are the things that everybody wants. And so I'm not going to go too much into this. I'm going to switch over to a different document and we're going to close up here. But you guys see everything here. I could have spent hours on the business structure. I could have spent hours on the business credit and personal credit. But just know you got to multiply them. Just know over here, we could have spent a lot of time on the personal/startup loans, like a lot of time. Over here, the revenue-based, the collateral-based, could be non-collateralized with banks here. Now we're moving up higher tiers. And if you're seeing a pattern, you're seeing how we are going from the revenue-based to bank loans to SBA loans with longer terms. SBA loans up to 10 years amortized, up to 25 years with real estate included. And so here you're seeing, okay, for 3 to 11 months, from 3 to 24 months. Now this other solution over here with collateral-based past 2 years, 2 to 10 plus years in some cases. Okay, great. What can happen there? Sometimes even under 2 years. All right. Lines of credit. Can you get approved for lines of credit right now? It's hard to get approved for them, even though you can get up to 18 months, even up to 24 months. When you have collateral, when you're speaking in terms of, I got to give up an asset to get funding. Oh, well, no. If you don't have to give up an asset, that's what I recommend. Even if the rates will be slightly higher and you're going to say, I can come back and get more funding, I can do this. I don't just need working capital. I have growth and expansion. I don't need money just sitting in my account for emergency funds for the next year that I'm not going to pull from, or I'll pull from very little of. And this is not going to double, triple, quadruple my money. And there's a few other situations at plan. So see how the pattern, and you're getting up into higher terms here. But down here, you can even get higher terms. Monthly repayments, daily, weekly, sometimes monthly, bi-weekly, but those are hard to get approved for. Collateral, monthly, bank loans, monthly. Boom, SBA loans monthly for a majority of these you see. Lines of credit, even in this market, still hard to get approved for, and they're usually weekly. So you're seeing a lot of this. Now let me switch over screens here and go back to this document that I had on screen earlier. We're going to close up. So again, this document will be down below for you in the description. So you see here, this is the revenue based. And this up here, this is pertaining to a different video that I made before you click through the applications for a different video. So for qualifications of the revenue-based funding without collateral, please read over this carefully, and all else from this point forward, application is below. See how not difficult it is to just read through something? And I'm not saying that to sound mean, but a lot of people just don't take the time. Have somebody else who needs to help you, okay, but take the time. Okay, if I know, I'm going to treat this like a contract. Michael, he's an expert. He knows what he's talking about. So he's going to show me what's most up to date. Oh, no, but I skipped through all this. Where's the application? Go, oh, here it is. Okay, I'm going to go click through that application. And then you find out you were declined. Or there was something that didn't get updated as fast. And you're like, okay, what is the issue? So those things happen. You're operating for profit. Things like that. We've done nonprofits. We've done charitable organizations. It's still hard to get them approved. There's been some recently, but it's very, very hard. But we can do them in some cases. And just don't think that it's always going to, though. Do you have a business checking account? Must be in the name of your business, not a personal account you use for business. If you're using a personal account for business, go to the self-employed option below in green heading, and I'll navigate you into this. But I'm not going to go through each and every qualification here. Just know that it is all there. Application, what you would be going through. I detail why you're going to be going through that application as well in certain instances, and why it makes more sense to do it that way than in other ways. Documents needed for specific purposes, how you'll need to submit them. If I ask for them via email, if I can't ask for them, or if I'd rather prefer we send it this way, you'll see that there. How it works, the approval amounts, other things to read through, early payment discounts, and stuff like that. We go throughout this. Underwriting guidelines, you'll learn all of this stuff here. Self-employed, if you have lower revenue, personal account, online bank term loans, what I spoke about earlier, but it goes into further detail. SBA loans, what I recommend to be the best situation for your specific needs and what you're trying to do for those preferred lenders. Over here, you even have more SBA loan options. As you see, the express loan up to $25K. And 1 second, got to move this over from my screen. So yeah, with that SBA Express loan, what I wanted to mention, and I put this in another document because things have been getting updated with it, but just some of those basic requirements to what you're seeing here on your screen. Let me move this up. So there is an SBA Express loan up to 25,000. There's other ones that go even higher. But yeah, it can be done without pretty much any kind of documentation. But some of the requirements that you should know about it, it's going to be something that falls in line with trade businesses like construction, HVAC, electrical, plumbing, etc. 725 plus credit to this, 2 years time in business. Some docs are personal financial statements, couple of application forms. There are about 4 to 5 docs. We also verify that they are that you are as well have a tax filing business. So we'll look at that. And sometimes we'll ask for those bank statements. Other times we won't, but just to verify that business. And so when some people tell you it's stated income, then it's not always the case. Just be very cautious of that. Sometimes it is, a lot of the times it isn't. And so there you see that there's another solution there. There's more as you go down this list. And I'm showing you the best of the best with details that you guys just can't get. And these are things that I prime as well from these lenders. It's not just found simply. Business line of credit, if you can qualify, if you can't. Equipment financing, and I may show you several options underneath this ones and tell you which one's best. The first option, asset-backed financing, cash out refinancing. This is the one that I told you guys about earlier. And another option for it is we can look at injecting equity out of a real estate property you may have, such as commercial real estate or investment real estate that you own. Or if you want to use it as collateral altogether, we can do that. So a few things are, in the case of a cash out refinance, I need to know if you have a mortgage on the property or if you own it free and clear. That way you can take a loan on the property for more than it's worth and pocket that difference. I would need you to answer 10 questions that I'll send you, and then I'll evaluate myself. I'll go over with the lender with them. We could do an appraisal. We could look at the environmental issues. Yeah, that's part of it. We can see if it's what kind of a zone property, if it's too high of a risk, that may not work. What was it previously? We need to look at all these things. We need to see what kind of area it's located in and all of these different aspects. 2, if you want to use real estate as collateral, it will be a sale leaseback, meaning the lender will hold on to the title of the property or your property or multiple. Let's say you're looking at different properties, then we can look at that or if you want to just use one property and the equity amount that we can inject out of is high enough, we can just look at one for what you need until the loan is paid back in full. You will get an offer on how much loan to value we can approve you on your property, which you will need to do an appraisal for. Rates will be over 8%, and a lot of the times you'll see, and terms, a lot of these times you see 1 to 2 years. For collateral, you need to have high value real estate normally to be considered is what you'll see. This is the credit-based financing option, personal business credit-based financing option. There's one there that details everything. There's a second one here that I can position and say it's better. So read through it. One of them will say 680 experience is good enough. One of them 670 on all three, or 680 on all three, if not 700. And what does it detail? It's all in there. And so you go through this. Oh, do I have a charge-off account? Okay, no. And if there's anything more I need to add to this and something that we couldn't put there right away for other reasons, then I'll be able to share that with you, but it's all there for the most part. Oh, well, I have a charge-off account. I have just recent payments, late payments. I have not enough trade lines, not enough age history. Okay, well, what would happen in the event of that? All of that is right there. And so here, personal funding option 3, I may say, no, that's not best. Skip it and go to option 1, not best to use. And so down here, credit line hybrid, it's intact with another one, with one of the other options. SBA microloans, community advantage, hard to get. Why? For what? Angel investors, equity crowdfunding options, venture capitalists, other VC and angel investor option, other options with margin accounts, financial guarantee bonds, fixing and increasing your FICO. Great. Credit repair. Yes, but not everybody wants it. Not everybody wants to do that because it takes time and energy to. But here's a quick news flash. If you weren't hearing for the past hour or just joined, if you separate your personal and business credit, you won't have to worry about a lot of this. You won't have to worry about continuously. You can drop your credit night and day, but you'll know how to get up to where you need to get to and why does it take and what kind of time does it take. What are the results of this? Credit repair, you see that detailing everything. Business credit, my free business credit building video series right there. There's other business credit card stuff. Fair to good to excellent credit score business credit cards. Bad credit business credit cards. There's a document on that as well. And I'm going to put it here. I have to update this section, but I have it in other places. But bad credits, there's also a document and stuff that I've created on that for you. Down here, home equity line of credit, home equity loan. You might think that's the number one thing to do or only thing, but it isn't. Even if you got a slightly or a bigger interest, you have to look at it and go, well, I'm putting my home on the line. Do I need to? Do I want to do that? 401k IRA financing option as well as stocks. This is a great option to start with. SBA EIDL, latest updates, employee retention credit. And the 401k is one that we can start up top with the personal credit, business credit, startup funding solution, option 2 or option 1, however you see it underneath the cap well there. Real estate submission form and a conclusion. So if it's real estate property related, you'll fill that out. Now I'm going to end the video here and let me move screens over. This is what we already more or less went into. So let me refresh this page and switch screens. Here are the 4 reasons that I more or less mentioned earlier. Why viral funding solutions? Why do business owners choose myself, my business? And I spoke about why myself in the beginning of this, but why the business with experience, versatility, integrity, loyalty. And I'm not going to go into each and every one of those segments, but you can see that on the screen as you are looking at. And then right here, here's more of the sites that you guys can check out. New here, we save you a lot of time and energy from all these online marketplaces that are very predatory, and being careful and giving you a legitimate response and help from an expert, somebody who cares, somebody who's actually been through what you're going through, and from everything from not just building a business and it's getting the funding for it, but the health, the relationships, all that. Literally, I've been there and done that stuff. And I'm not somebody who's a know-it-all. That's not what I've been saying. It's that I've had to work on things to get me to a better position. And so how it works, you can see more of that there. And our services are plenty more. Learn more about myself there, the top here, and more solutions. And then how it works, you can even click right here. The other one at the top could take you to a different quiz or somewhat similar. But here on this page, then you can select from one of the 2 options. It'll look like that more or less. Some of the results I've driven. These are just some of many. I only fit the page, or just got a handful of them there. How it works. And you can click one of these 2, whichever one applies to you. Free 6-step pre-approval lending checklist included. And then you can go through this. Make sure you read this again. I see a lot of you who don't read it. I've seen people who apply and I redirect them to an application. Whether they read it or not, it's like, are you ignorant? Are you that ignorant that you went in and applied? Or did you just not see the writing that was on the wall? Because that's obviously it's right in front of your face. And so a lot of people, they'll still apply regardless. They'll go, oh, that's probably out of date, or something should work. Yeah, but you just racked up another inquiry, even if it's a soft pull. Like, do you get that? Like, getting too many inquiries, specifically underneath the same provider and even other providers, they're seeing all this stuff. You just applied recently in the last 30 days. You got another loan. Okay, this is happening so much. But here, make sure you read this stuff. I'm not going to go through it right now, but look at that. It's very important. Your name all the way down to, please describe your financial needs. Yes, it kind of looks a little bit long, but it isn't. You can get it done literally in less than a minute. And you don't have to have everything, but give me like close enough. Give me estimates. Give me good enough that I can say, without you looking at your bank statements and revenue and stuff like that, you have at least a knowing of what you're generating, because that's going to help me pre-underwrite a file. I'm pre-underwriting these files, guys. I'm looking through this information. I'm evaluating, analyzing, and I'm giving you a proper response back that's highly personalized and customized. And I'm saying, well, your credit, your scores. Okay. Now, I didn't ask if you have derogatories of that yet, but we'll discover that. And I'll show you those solutions, and you can read those solutions and say, oh, yeah, I can't have a charge off. I can't have late payments over a year. I have a late payment in the last 6 months. All right. So that option won't work. How about bankruptcies? How about medical bills and stuff? Okay. Yeah, there's an exception to that. Okay. I saw that there. So now I'm going to get started. Boom. So take the time to go through that. And I'm laying it out. I'm looking at the numbers if you're generating revenue. Maybe it isn't collateral that's asked for on that form, but I'll show you solutions to collateral-based. And if that's something you want to use to mitigate other risks and scenarios, okay. But I've done this so long now without looking at bank statements to begin, without looking at tax returns, without looking at interim P&Ls, balance sheets. That stuff can come later on depending on the service. And yeah, I know how to do all that stuff too. But, and also credit reports. But for here, I'm going to be digging this up, and I can do a lot of this without looking at any of that. And I know. And this is why my skill set is so high. And this is why you would pay for those kind of skill sets. And so the skill sets I've applied to helping business owners generate leads, affiliate marketing related purposes, and all these other things, and being a cerebral person, this is a skill set that I'm putting together for you and packaging it to you. So look at it that way as well. And it's going to be very informative. You'll have everything in one place. You're going to go. I've had people who tell me, if nobody understands or nobody gets how you, it's not about what I say. It's hugely about why I say it. It's about reading between the lines. But a lot of it is how it's packaged, how it's delivered. And so when you see these emails or wherever I put it, and you see everything in one place, whether it's a long email or not, get over that. It's overwhelming. It could feel like that in the beginning. I know that. I know the psychology of that. But you at least know you have everything in one place. So you go, oh, dang. So I have the credit, I can qualify, but I don't have the revenue. What would it take for me to get to revenue? So I'm going to show you those options. I'm going to show you a roadmap. I'm going to say, hey, once you start generating 3K, now you can come to me and tell me in about 6 months using this other credit-based solution, I should have a minimum of $5,000 per month over the last 90 days. Okay. So then we can revisit this in about 3 to 4 months down the road and try to get you short-term financing. Or if we're trying to refinance any kind of business debt, then we look at another solution. All right. Now, after that, how about an SBA loan? Okay. At that point, you might not have any more funding left, or you may have to refinance, consolidate if so. So does it make sense to do an SBA loan? Can you qualify for an SBA loan? And these things can change in the market from time to time in specific industries. So you have to stay in the know with a lot of this. Okay, so that'll be in there. And then also, people always want phone calls. I'm an introvert, but that's not because I'm not good at calls. I do very well in calls. And it's also because I don't speak as much. I listen more than anything, and I ask the right questions. And if I were doing phone calls inbound and outbound every single day, I'm not a traditional salesperson. I'm a very skillful system mathematical person. And no offense to anyone who's just traditionally a salesperson. That's not what I mean. It's just different skill sets. And I know how to do the whole selling part. I get that. I know those skill sets, but I'm not here to sell anybody anything. I don't even like to use that word. Although I just did. I hardly ever use it. It's not in my vocabulary in whatever context, whether it's good or bad. Giving, helping, valuing, showing. And so I see it time and time again, but I think that's it. Let me go to the comments if anybody has anything. I'm not going to spend too much time on an FAQ. This is more of a spontaneous live. So for those of you watching, I didn't announce this, but you guys can watch the replay. It'll be on. And right now there's not a description. I'll leave the description and information there on the replay. I'm going to go back into this video and edit it. And so a lot of things that people ask me are, how can I get no PG loans? And if we kind of said that in the beginning, it just really doesn't exist. Like, just let's face the facts. And sometimes there are no PGs included at a certain level when you get high enough, but even then it's still hard. You have to be personally liable and accountable and responsible. A lot of people throw hate. Well, the country is bad. And no. Don't throw anything bad against the government right now. This is not the government's issue. This is not the government not being able to give you an EIDL loan, another PPP loan, I get it. A lot of people are in a position where they need that money. They can't find money anywhere else. But I think more of it is it's a lack of resourcefulness. It's a lack of resources. It's a lack of resourcefulness more than anything. So if you were telling me you couldn't get anybody to help you, that's one thing. But if you had somebody who was willing to help you, and are they open to, maybe you make them a partner in your business, or they're not a partner, but you give them a certain percentage of something, equity or whatever you're trying to do, pay them back with the money you make in your business, paying back that loan back. There are different solutions that are customized, but just saying, well, my country and I'm just so proud. Yeah, you're prideful. Great. I love that. But how is this making any logical sense when it comes to your credit, your cash flow, collateral? Business and personal credit. Hello, how are you doing? So another question that comes up quite frequently to me, and I'm kind of just splitting between these two, and I kind of mentioned this the other day, is do you need an LLC, an S corp, C corp to get a loan? Not necessarily. That's a very kind of obvious answer. And even when you're getting business credit cards, you can even still do that without those formations. Uh, the approval percentage for certain types of services is a bit different in how you can verify proof and what would help in an existing business. But as a sole proprietor, non operating with those entities, then you can still get funding. But that's for a different time. I can go into it even deeper. We're just going to leave it right there. Another one, I want to draw upon personal credit. One thing, this is not so much of an FAQ, but this is just kind of a pro tip, and I've done this many times. If you have questions about anything business funding, about a bank, what do you think is the best thing to do? If you've said calling, of course, walking into the bank. I've done this many times where I've played roles and I introduced myself and I'm looking for a business loan. What are the parameters to get it approved? They'll probably ask you questions on what type of business, what entity. They're going to give you a margin of this percentage on top of that percentage in interest over these amount of days. If you're doing a secured loan, maybe have to have a specific relationship established with that bank. You can start getting funding right away. Some other banks will say you have to have an account open with them for about 12 months, have a deposit of about $1,000 per month over an extended amount of time. Other ones go where you have to secure with the deposit equivalent to the amount of a loan we're going to give you. So 15,000, you get 15,000 more or less, and then you're paying that back with interest. You can freeze things while you're still paying on interest, but just realize that the best way to find your answers, and I've helped out people with these kind of things too, is just giving them a call. Hey, I have a situation with, I want to get a person. What is the this and this? Boom. When I call lenders that I'm probably trying to team up with and I don't have information on just yet, guess what I do? Or organizations. Can you send me more information to my email, please, on this? Great, appreciate you. Done. Next step. Boom, that's not going to work for me. That one won't work for me. Boom, not going to submit them there. Boom, boom. I'll submit them there in the future. Boom, boom, boom. Simple. All it takes. But a lot of you are avoiding. Don't fill out my questionnaire. I'm going to be very honest with a lot of you. Please, I don't say this to sound aggressive or mean. Some of you are looking at the screen probably, or now or later, or just hearing that this Michael. No, I'm not aggressive. I'm not negative. I'm not any of that. The thing is, a lot of you waste my energy and time in ways where it doesn't make sense. There are different ways of looking at that, but in ways of like, you fill out a questionnaire, I responded back. I took time. I took 30 minutes to 45 minutes to an hour's worth plus to put this nice questionnaire form email for you that's tailored, that makes sense. And I'm just asking you, did you see the email? Did you happen to go through this? I don't want to have to ask you, do you have time to get on a phone? Like, I'm not a guy to ask that. Do you have time to? I'll probably sometimes do, but that's getting out of my own. Like, you got to do things that are out of your comfort zone. But, and I do that. But if we don't have to get to that point, and we could have done it this way instead, but you just chose to ignore things. Hey, Michael, I'm busy right now. I'll take time to read through your email. Hey, Michael, I'll take time to submit your documents that you need. Thank you. But a lot of you are just, oh, me, or just very like there's a time and a place for this, for baby, and I'm okay with that, helping people on. But a lot of you are just like slow motion is fine. That's how I am. I'm slow. I'm a slower person now than I was in my younger 20s, and that's because I'm more experienced in things in life. I'm not the most athletic person. And just to close this video, I played Division I soccer. I don't have the best athletic flexibility abilities, but guess what I had that nobody else did? And that the majority, the 99% of people didn't have. On top of skills that I had to learn as we learn in business or in other means. I had this before, I had this that came with it, and then I had the skill sets that I had to improve every single day, work on the habits, work on the routines, get private coaching, working with the best in the industry. Boom, getting to a level that I was high enough to play in, going up to the highest divisions, going to Brazil and playing and doing these things. Now they're less irrelevant to me, and I do other things with my life. It's like that never ever even happened. It's like I got a lot of other things going on. From time to time, I'll revisit those. But the thing that never goes away is the know-how, the subconscious and conscious programming. And other times you just have to reprogram. You have to go through left foot more than your right foot. If I'm kicking the ball, like these days, I'm so in a way where if I ever kick a ball, I don't do it hardly ever anymore. My younger brother does it more, but I train my left side of my brain. I train my left foot. I only move on my left foot with the ball. I'll kick the ball against the wall back and forth with my left foot, a sequence of 20 to 30 times before I then move over to my right foot. Why? Because I'm working on my weak point. It's strong already, but I'm working on that weak point and I'm making it a strength. I focus on my strengths, but I'm also focusing on my weak points. And I'm saying, I'm going to make this stronger so that when I'm moving this way and in this direction in game time, practice time, that I'm going to be better off than the majority of the others. I'm going to be in better position on the field. I don't have to run a lot. Center midfield player, attacking, and then I was a holding midfield player. Very cerebral, looking at the field. Very, very 1, 2 steps, 3 steps ahead of the person. I knew where the ball was going to be, whether I received it or not. I knew where my players were, where they would move into if they weren't there a second or two ago. I knew how to take a step here when I needed to, a step there. I knew how to win challenges appropriately, how to shoot the ball and score a goal when I needed to. Or if it weren't going to be a goal, how to put it on frame. So like kicking a soccer ball, you have to keep kicking. You have to keep putting it in front of the goalie, even if he catches it, even if it's right next to him. But the next time around, you're going to learn to kick it to the left, to the right, bottom left. I said bottom left, bottom right, top left, top center, through the middle, and it goes through. But a lot of you are not taking those shots. You're just so scared to step up and just take that penalty kick or hit that swing and put it in play. A lot of you are looking for a home run. Can't even step up to the plate. And why can't you step up to the plate? Because again, you haven't worked on this enough. And this is driven in character. This is driven in fear. This is driven in beliefs. This is driven in your aspirations. And then this, a lot of it doesn't align with this. So if you're not aligning this, it's not just an interest, but a passion in what you're doing and aligning this to go with it. Forget about the skills and the talent. If this and this does not line up, you can forget about all of the other stuff. Anybody can be athletic. Anybody can go throw a ball, kick a ball, shoot a hoop if they can. Maybe you're not the best when you shoot the ball. Anybody can do these things, but can you do it day in? Would you want to do it day in and day out? Can you wake up at 6 a.m. and do the weights and do the things you need to do, go to class, go to your job in the evening or in the morning, do whatever it is you need to do and take care of your family first. Pay yourself first. Focus on your health and your relationships. That's really what it is. All right, everybody. Appreciate you all. Thank you for tuning in. All information will be in the bio, or I should say in the description. And like you guys just heard, and not to sound redundant or recapping, but the no SSN, you guys got to be careful of that. The no doc stuff, the EIN only, and what forms it can come in. And the funding value ladder, which was most important that we focused on today, there's a lot more I could have covered in that. and just knowing the different elements and where you're moving to. And there's some little parts of that funding value ladder that we could have added to, subtracted from, and there's things that change over time. But that's what you're going to see. And a lot of you guys are just, I want this, I want that, but you guys can't get it. So what do you need to do to get it? Well, it's going to take more effort and it's going to be more resistance and friction. And so what? If doing this means you get to raise your revenue, you get to raise the value of your business if you ever decide to sell it. And in fact, a lot of you should be building a business like you're going to sell it. Not that you have to, or you're going to work in partnership with somebody and you give them equity stake or something else to take you to the next level from a certain amount to another amount. Or you say, well, I need to make sure that these goals align first versus the others. But I'm going to work on the things that need working on, because this is going to mean not only revenue and cash flow and profitability. Dang, this is going to mean I can take vacation for more than 2 to 3 weeks now and feel like I'm in a place where I don't have to worry about money, or I don't have to worry about stressing out about how the business is running, or that I'll have a business in the next 6 months. I can just kick up my feet into the sand in Lake Tahoe or wherever it is and look out into the sun, look out into the clear water. You can drink from that water, in case you guys didn't know. And you're just sitting there probably with a book, with your shades on, with your cool adult beverage or whatever it is, watching the kids run around, kick a ball, throw a ball, hit it with the bat. See the waves, or you see the boats out into the ocean. You go back into the cabin or wherever you are, your Airbnb, hotel, whatever it is, and you just feel more happy because while you may check in from time to time, you're not stressed out. You're not having to feel like, well, I'm going to be sitting on my couch tomorrow and trying to figure out what's on TV. Oh, here's TLC. Here's my 90-Day Fiance. Here's this new episode of this. No offense to those shows, but here's this next episode of Dexter. Here's this next. Okay, great. You like watching that stuff, but you shouldn't have been watching it. Instead, you should have been doing this. Last night, guys, I spent about an hour to 2 from about 9:30 to about 11:30 or less replying back to emails, and I still have more to do, doing some questionnaires. So that'll be everything for me. Appreciate you guys. Thank you for tuning in. All information will be in the bio. Let's have a great remainder of the week. Spread this information to others in case you'd like to. I don't always say that. If you did get value from this, please share it with others who you feel will find value from it. It can be a complete stranger, a friend, or a family member, but you help them out. You can rest your head on your pillow at the end of the night. You can rest bedside. You don't have to wake up like you're in some Sahara desert, you can't even breathe, or it's just too cold, or you're in a bad place, it doesn't look right, unorganized. But you wake up subconsciously and consciously knowing better that day is going to turn out the way you want it to, or at least these things are going to go right. We need to fix these things still, but I know this part of my day, I'm going to rock it, and I'm going to rock and roll with it. And the other person too, they're going to wake up feeling more refreshed, not groggy, not having to do all this. And like, see all of these things. And in a way, I'm saying that as in like demonstrating, not on a medical level. I'm not saying that. I'm saying it as in like just showing and illustrating that these things happen to people. They wake up, gotta wake up for work. Gotta go wake up and do my 9 to 5. I gotta go work up. I gotta go to my business, and I gotta go do all these things that I don't want to do today. I don't know if I'm gonna have a job tomorrow. And I'm not saying that to sound mean or aggressive, guys. I want to illustrate a point that if it doesn't hurt enough for you, if it's not painful enough for you, guess what? You won't make enough of a shift, I should say, to make a change, to completely change, or just to change some of it if it needs changing. All right, everybody. That's all from me. And if you didn't subscribe, please go ahead and do so. And click that bell notification icon so you do not miss any future content I'll be coming out with. Talk to you all soon. Bye.